Good morning and welcome to the Thursday, February 20th, 2025 meeting of the House Commerce, Finance, and Policy Committee. This morning we have three bills that we're going to be taking up, and then the fourth bill is one we will be picking up, talking about, has to do with mandates in kind of a workshop session. Our very first bill today is by one of our members, Representative Reyer, and Representative Allen is also a co-author on this. And Representative Reyer, if you would like to move the bill before the committee so we can hear it, it is going to go to the General Register. So if you'd like to make that motion.
So move, Mr. Chair, that this bill be re-referred to the General Register.
All right. So upon the conclusion of conversation, Register. With that, Representative Reyer, I'm going to turn it over to you to present House File 1014. Representative Reyer.
Good morning, Chair Driscoll, and thank you. Lead her and committee members.
Representative Reyer is a trick. Yeah, you got to move closer. And I found out that I'm not always on mic either, so.
Just in case you didn't hear it, I wished you all a pleasant good morning. House File 1014, the High Net Worth Exclusion Law, is a bill that provides additional authority to the Minnesota Insurance Guarantee Association in cases where a property and casualty insurance company becomes insolvent and is ordered to be liquidated by a court. In these cases, by law, policyholders with a net worth of over $25 million are not allowed to make claims against the insolvent insurer. This protects smaller policyholders, ensuring they'll have more opportunity to be made whole. To determine policyholders' net worth, the MNIGA can use public data if available, or can ask the policyholder to return an affidavit with their relevant financial information. If MNIGA can't determine that the policyholder is in the high net worth category, MNIGA is required to pay their claims. Note, there are no consequences for not returning the affidavit, which gives high net worth policyholders an incentive to ignore the request so they can receive a payout. This bill addresses this problem. House File 1014 offers a very simple solution. It adds a consequence. If the policyholder does not return the affidavit within 60 days, they're assumed to exceed the net worth threshold and are not eligible for claims. So that's the bill. I appreciate MNIGA bringing forward this solution. I'm pleased that this bill has bipartisan support and that Commerce has no concerns with the bill. I ask for the committee's support and would like to turn it over to my partner in the bill, Representative Keith Allen, and MNIGA's Executive Director, Mr. Jeff Christensen.
Let's go to your co-author, Representative Allen. Is there any other comments you'd like to offer this morning on the bill?
Yes, thank you, Mr. Chair. In a lot of respects, this is just serving to work as some language cleanup and actually help with, like she said, the good representative said, was give us a 60-day window in order to be able to file on this. The one thing, they're kind of an unsung hero, especially among the insurance world. They serve very familiar to what you'd see in a bank, right? The FDIC. They're essentially the FDIC of the banking world for insurance, and they do an exceptionally good job. That we're very fortunate to have them there, especially when you're dealing with a situation where there's an insurance company that goes insolvent. At least the insuree is still covered in those extremes. So I urge your support.
Thank you, Representatives Reyer and Allen, and we're going to go to Mr. Christensen, the Executive Director, for his comments. Mr. Christensen, if you would identify yourself for the record, please, and proceed with your testimony this morning.
Jeff Christensen, Executive Director, Minnesota Insurance Guarantee Association. Thank you. Good morning, Chair O'Driscoll, lead her, members of the committee. I would like to thank Representatives Reyer and Allen for co-authoring this bill, which will help MNIGA more efficiently manage and pay claims on behalf of the insolvent insurers. So the process now when we are requesting net worth affidavits from various insureds is about 90% of the time we do not get any type of response from them whatsoever. So then we have to send out a second request, and if we still do not receive anything, we've got to pick up claims or do internet research and try to discover if a company is net worth or not. This proposed language changes that in that we require a response from them or there are consequences for them not responding. That's going to allow us to take care of the smaller companies, the smaller players in the game that need our help, and in essence is what MNIGA is created to do, is to help those people who at no fault of their own have suddenly lost their insurance company and their work comp claim is no longer being covered, and then we are able to cover it under ours. So that's the purpose of the changing of the language there. It's not unique in the Guarantee Association world. Illinois, Louisiana, Indiana, Alabama, Oklahoma already are just some of the states that have changed their language or have similar language requiring the insureds to respond. Thank you.
Thank you, Mr. Christensen. Members, questions for the representative or the executive director? Representative Davids.
Thank you very much, and to the testifier. What, I don't need the name of the company, but what was the last time a company went insolvent?
Mr. Christensen.
2023.
Representative Davids.
Thank you, Mr. Chair, and before that?
Mr. Christensen.
Mr. Chair, Representative, answer the question is 2022.
Ooh,
Representative Davids.
thank you, Mr. Chair.
Right. Other questions from the committee? Anyone from the public wishing to testify or provide comment for the committee's consideration before we bring the matter before the committee for a vote? Again, I will just comment very quickly. I appreciate the bill, and I understand, even though the claims are relatively infrequent because of insolvency, it is becoming a question. When you send out the paperwork and you don't get it back, you have to maintain that claim open, and you don't know what to do and how to deal with it. And so this is a reasonable piece of legislation that says, hey, if you don't get back to us in 60 days, it's a negative checkoff. We're going to assume that you have the net worth assets in excess of what the statutory limits are, and we're going to go ahead and close the claim. And that seems reasonable to me that we would do that versus keeping that keeping the claim open, and as Representative Reyer presented in her testimony, disadvantaging others in a situation where those with smaller policy claims or less net worth may not be able to get their full complement through the recovery fund or through the Guarantee Association. So it seems like positive legislation to me. Representatives Reyer and Allen, I'll give you final comments before we take the matter up for
Thank you, Mr. Chair. No, I just appreciate your support.
Thank you, Mr. Chair, and I will echo her words as well. Would you? So thank you.
All right, well, then with that, Representative Reyer renews her motion that House File 1014 be re-referred from the Committee on Commerce, Finance, and Policy to the General Register. All those in favor signify by saying aye. Aye. Those opposed, the motion prevails. You are on your way. Thank you for kicking us off with very good bipartisan legislation and showing us how it's done for the rest of the session. With that, our next bill that we'll be taking up this morning is House File 3020, which will be presented by another one of the members of our committee, and that member is Representative Bernie Perryman. As Representative Perryman is making her way to the testifying table, members, that is House File 320. And this is also recommended to go to the General Register. And so Representative Perryman, when you are ready, if you'd like to move the bill before us, and the recommendation again is that it go. Representative Perryman.
Thank you, Chair. Ojusko, yes, I'd like to make that motion to move it.
All right, so Representative Perryman brings the bill before the committee with a recommendation to refer to the General. Representative Perryman, to House File 320, please.
Thank you. Thank you, Chair and the committee. HF 320 basically provides statutory clarification that automobile dealers can exhibit at the auto shows and outlines the framework of what that participation looks like. Very simple. Why the bill is really needed, it seems very simple, but on a national scale, auto show participation has evolved from manufacturers to dealerships. Questions have been raised over the dealer's ability to display vehicles outside their licensed location. That's the key, display outside their licensed location for a dealer. This bill provides clarification that auto dealers can be auto show exhibitors. This bill's intent is to simply clarify car dealers' ability to participate and showcase, but not sell their vehicles at shows, at auto shows. And now, Chair, if you permit me, I'd like to have my testifier speak.
Sounds good. Ms. Reyer, if you will introduce, Ms. Dewar, excuse me, you will introduce yourself to the committee and state your name for the record and proceed with your testimony. Welcome.
All right. Thank you, Mr. Chair. For the record, my name is Amanda Dewar, and I am the Director of Government Affairs for the Minnesota Automobile Dealers Association. First, I want to thank Representative Perryman for authoring this bill, and I'd also like to thank our bipartisan co-authors, Representative Elkins, Hewitt, and Kresha, for also signing on. This is a very simple, straightforward bill providing statutory clarification that auto dealers can participate in an auto show. Like Representative Perryman said, there's been a shift on a national scale in participation in auto shows from the manufacturers to the local dealers. So the manufacturers are now relying on local dealers to showcase their fleet at auto shows. The confusion lies in the fact that dealer franchise agreements with their manufacturers often include dealer marketing areas, which are geographic service areas where they are selling their vehicles. And sometimes these dealer marketing areas are exclusive, sometimes they're not. Also, new motor vehicle dealerships are also an extremely regulated industry. Dealer licenses with the state outline facility requirements for selling motor vehicles that include commercial buildings, display space, parts and repair areas, and signage. New motor vehicle dealers are only allowed to sell vehicles at locations listed in their dealer license. And because of all of these regulations, there's been confusion on the part of dealers if they're able to participate in the auto show. So this bill makes it clear that vehicles are not for sale or lease at the auto show. And it also outlines that dealers cannot appraise customer trade-ins or advertise pricing outside of the MSRP. In the end, the bill just provides clarity that being a trade show exhibitor is different than selling vehicles and removes any confusion over a dealer's ability to exhibit at the auto show. I'll also note that the Alliance for Automotive Innovation, which is the manufacturers trade group, I've spoken to them and they are not concerned with this bill. They have no concerns. So thank you very much.
Thank you, Ms. Dewar. Members of the committee, any questions at this point for the bill author or the testifier? Seeing none, is there anyone from the public that would like to testify on the matter before the committee? House File 320. Anyone wishing to testify on House File 320? Seeing none and hearing none. Representative Perryman, my apologies. I should have asked this question when you came to the testifying table, and I was remiss in doing that. Is this your first bill by chance?
No, it is not.
Are you sure it's not your first bill?
I know where you're trying to catch me, but no, I presented last week in public safety.
The members of this committee have to get up very early and may miss breakfast at times to get to this committee.
I'll meet you at Key's Kitchen in the summer.
Thank you for playing along, Representative Perryman. Seeing no other questions on the matter before us, Representative Perryman, if you want to renew your motion.
I would like to renew my motion,
Okay,
please, Chair.
that House File 320 be referred to the General Register. All those in favor of the motion signify by saying aye.
Aye.
Those opposed, the motion prevails. The next item that we're going to take up is one of our bill authors, Representative and Representative Niska is en route to the committee here. So what I want to do is I want to take care of a couple of administrative things which will help us at the end of the committee hearing today. First order of business that we'll take up administratively is the minutes from yesterday's meeting, February 19th. Representative Faulkner, have you had a chance to review the minutes and be willing?
Yeah, the minutes look great to me. I've moved.
All right, Representative Faulkner moves the
Sure,
minutes from the committee February 19th. Any questions, corrections? Seeing none, hearing none. All those in favor of adopting the minutes signify by saying aye.
Aye.
Those opposed, the motion prevails. A little bit about what next week looks like for the committee as well. On Tuesday, we are going to have representatives from various state agencies that deal with and regulate alcohol to talk about that in front of the committee. We have received a number of alcohol-related bills. Not sure what our glide path looks like for alcohol-related bills and matters before the committee, but given the large number of bills and even large number of bills from people on this committee and the makeup of the committee with people being on the committee for the first time, either because of their first term in the legislature or not having been on Commerce, thought it would be good to be able to have some conversation talking about that, because we have bills from all over the liquor map on this, from local regulations to some things about social districts and the like. And so I wanted to have some conversation on that. And then secondly, bringing folks in from the gaming agencies here as well. Talk a little bit about the lottery. In the past, we have had some conversations about sportsbook betting and the like. And those things may find themselves back to the committee, if not this year, for sure next year. So I want to make sure that members have a real good understanding on that as they're approached maybe by special interests, if you will, from their district or that approach you to talk about those. You have an understanding of how gaming is regulated here. Wednesday, we will not be meeting, and Thursday, it will be my intention as well to be bringing up additional bills like we have this morning for consideration and passage out of the committee. So a little bit of a lay of the land of what we are looking at for the next few days. To keep things moving, what I think I'm going to do is we're going to have Representative Perryman go back to the testifiers table, and we're going to bring up House File 400. And when Representative Niska gets here, we'll lay the House File 400 on the table, bring up his bill, which is another bipartisan bill, very similar nature and or I should say time commitment of what the other two bills we saw. We'll take that, and then we'll revert back to House File 400. Is there any objection to that? Leader, are you okay with that? Okay, thank you. So with that, Representative Perryman, I will move House File 400 before the committee, and so there will be no re-referral for this matter. So with that, Representative Perryman, if you would like to background us on House File 400, which talks about mandates, and it kind of dovetails off of what we've been talking about with insurance and insurance premiums as well as insurance coverage. Mandates are an item that are in there, and that's an important conversation for us. And so you're getting that started for the committee. Representative Perryman.
Thank you, Chair. Thank you, Committee. Yes, as we heard yesterday, mandates, health insurance, very rising costs going on right now. And this bill, HF 400, basically requires the state would make defray payments to health plans to cover any new health benefit mandates that would raise cost on enrollees. Very basic, and we're talking about mandates. Before I bring up my first testifier, I just would like to bring up a few comments that might be different than my testifier, but the cost of health insurance is a real concern for many Minnesotans. We talked about that yesterday. Minnesota has the 13th highest individual premiums in the country for employer-sponsored insurance. According to the Minnesota Department of Health, since 2017, Minnesota families have reported among the highest median health care spending in the country. It's not surprising then that a recent KSTP poll, Minnesotans ranked health care as a top issue for the legislature to address, second only to lowering taxes. One of the ways in which the legislature can help to address concerns about the cost of health insurance is taking a different approach to health insurance mandates. Through this Affordable Act Care, health insurance mandates help people. So I really want to emphasize that statement, that health insurance mandates do help people, but they also come at a cost. And the proof that we need to look no further is the Affordable Care Act. Through the Affordable Care Act, the federal government subsidizes a significant share of the premiums in the individual market. Knowing this, Congress wanted to make sure that states didn't drive up the cost of the federal government's subsidies through additional health insurance mandates. So the Affordable Care Act requires states to defray the costs of some new health insurance mandates placed on the individual market. HF 400 takes this thinking a step further, and we talked about that yesterday. This is open conversation. This is where we start talking together and looking at our opportunities and making healthcare stronger. It would require, though, state deferral for all new health insurance mandates and for every segment of the fully insured market, individual, small group, and large group. There are many components of the cost of healthcare in Minnesota that are outside the direct control of the legislator, but only the legislator can choose whether or not new required mandates are added to health insurance sold in the state. In those circumstances, when a decision is made to do so, HF 400 provides the legislator with the means to help those who seek the benefit of additional health insurance coverage while protecting Minnesotans and their families from the cost increases associated with those new mandates. These statements are just really basically what I'm seeing and observing. This is going to be a long time to talk about. We talked about reinsurance yesterday. Today is about mandates. But really, I think Representative Herr said it yesterday, it's about our constituents, and the cost of health insurance is rising very fast. These are just some opportunities that we might be able to use in our toolbox. And to describe it further, I'm going to bring up my testifiers to speak to the intricacies of this HF 400.
Representative Perryman, before we bring in the your testifiers, we have representatives from the Department of Commerce who can talk about the mandate process as it stands right now and how that review process works. And I think that's good baseline information for the committee. So if we can have folks from the department come up and overview for us how the mandate review process works.
Perfect. Thank you. Thank you, Chair. Hi. How are you? Thank you for being here.
Good morning, Deputy
morning.
Commissioner, and welcome back. If you'll identify
Thank you.
yourself for the record, and then overview maybe the history of the mandate process, how it works, and what the legislature has done in the past with the findings from your agency. Again, welcome. Identify yourself for the record and proceed.
Absolutely. Good morning. Julia Dreyer. I'm Deputy Commissioner of Insurance at the Department of Commerce. So there are, sorry, Mike's here. So a couple things. So currently, we follow the defrayal process as outlined in the Affordable Care Act. So if a state legislature passes a new state mandated benefit, we are required to defray the cost of any new additional benefit. And so at this point, we have a handful of mandates that we're required to defray costs on. Once the claims have come through from the health insurance companies, we then review those claims and pay the actual claims amount and reimburse the insurance companies for those costs.
And thank you again, Commissioner. Question for you on that, on the process. So what ends up happening from a legislative standpoint, because a few years ago, prior to legislation from a few years ago, what was happening is any member who had a desire to have a mandate considered put a bill in, and it found its way either to the House and or Senate Commerce Committee, and people were brought in, testimony was had, oftentimes laid over for possible inclusion in a bill. We really didn't have any background as to how many persons might be affected by the mandate, what the cost of the mandate is, how that might have an impact on insurance premiums. Are you able to maybe discuss a little bit more about that process and what your office does when it receives that and the information you then provide to the legislature as a result of that exercise?
Absolutely. Thank you, Chair. So if a legislature does want to propose a new benefit mandate, that list of mandates goes, I should clarify, you all choose that list of mandates and the ones that you want us to review. We then review them. We do a study on those mandates. So we look at the public health impact, we look at the cost of passing that mandate, both in terms of per member per month costs, as well as any sort of, if it would be eligible for a defrayal cost. So in other words, if it meets the qualifications of a new benefit mandate versus just say increasing the cost sharing or decreasing the cost sharing for a mandate. We then complete those reports and send them to you all for review, and that helps to inform any further discussion on those particular mandates.
Thank you, Commissioner. Questions for the Commissioner at this point? Representative Elkins.
Thank you, Mr. Chair. So I was actually the author of the mandate review bill, carried the bill for the chamber, and so I've had a kind of a vested interest in tracking the way the process has played out. And a number of bills have now been through this process, including a couple of my own. And a couple of observations I would make is, one is that a significant part of the time the department opines that the proposed mandate isn't actually a mandate as defined under the ACA. But frequently there is an estimated cost ascribed to it. And a question I would have for Ms. Reyer is, has the department been keeping track of the cumulative amount of the estimated, what we would term in this context, the defrayal cost? And could you provide that to us for our deliberations? And then also, what percentage of the mandate reviews that are submitted to you result in a finding that the mandate isn't really a mandate as defined in the ACA?
Commissioner Dreyer, there was a lot in that question. If you'd like to have Representative Elkins maybe do it piece by piece, or if you have it all, that's great too. I'll just let you get started, and if we need clarification, we'll come back to Representative Elkins.
Thank you, Chair. Thank you, Representative Elkins. Great questions. I don't have any of that information on hand, so I would have to follow up with all of that information.
Yeah, Mr. Chair, since we're laying the bill over, we have some time, but those are the kinds of questions
Very
I've
good.
answered by the time we start talking about it again.
Very good. Are there any other member questions at this moment? What I think we're going to do is we're going to lay this bill on the table for a bit and then bring up the other file as Representative Niska is here, and that's another bipartisan bill that will only take just a few minutes. So temporarily going to lay on the table House File 400, and then before the committee, and Commissioner, if you want to just stick around because I'm sure there may be some more interactive questions that you want to respond to. And I'll invite Representative Niska and his testifiers to the table as we bring House File 747 before the committee, and I will move that House File 747 be recommended to be re-referred to the Committee on Judicial and Civil Law. Representative and Leader Niska, welcome to the committee this morning. If you'll go ahead and proceed with your testimony. Just a little bit of word of caution. These mics have been a little temperamental the last couple mornings, so you kind of get a little bit closer to the range on that. Otherwise, it doesn't get picked up on the audio in the report. Representative Niska, to your bill.
Well, thank you, Chair O'Driscoll, and it's nice to be back into one of my two favorite. Glad to be here today. I appreciate the opportunity to present House File 747, which is a bill that comes from the State Bar Association Corporations group. It updates the Business Corporations Act, and the purpose of it is just to keep Minnesota up to date on the best practices in developing norms in corporate governance. It was carefully developed through a long Bar Association process that looked at recent changes in the Model Business Corporations Act, as well as developments in Delaware, which is the leading jurisdiction for corporate law. And passing this bill is really just intended to keep making Minnesota an attractive place to incorporate. I have with me Attorney Kim Lowe, who was involved in the process on behalf of the Bar Association to provide more.
Ms. Lowe, welcome to the committee. If you'll state your name for the record and then proceed with your testimony. Welcome.
Thank you, Chair Driscoll. My name is Kim Lowe. I'm a lawyer here in the Twin Cities. I'm also a member of the Minnesota State Bar Association Business Law Section. Part of, as Representative Niska said, part of our task at the business law section of the MSBA is to keep track of changes in the laws around the country and to also make sure that our entity laws are sort of up to date. They're ready to go. They're handling issues that we see that are happening. A little bit of background about entity laws. People get confused. These are the laws that govern a corporation and how the owners and the officers interact with each other. This is not the law that governs how the corporation interacts with the world outside. It's how they internally interact with each other, how decisions are made, and how shareholders interact with officers and directors. I like to call it inside baseball. It's not something people get real excited about unless you're a business law lawyer like I am. So part of the changes that we've made here, and this was alluded to earlier, are driven by changes around the country. We look at two different areas of changes of law generally. One's called the Model Business Corporation Act, and that's a product that comes out of the American Bar Association. And then we also track very closely the state of Delaware, which is the leading in the country when it comes to corporate laws. That's, people always ask me why. I'm like, it just is. So they have a leading indicator about changes in the law, and their legislature literally changes their law. So we track that pretty closely here in Minnesota. One, because we want to make sure that our companies here that are formed here and governed here have the best tools in the tool chest to function, especially if they're dealing with businesses that are formed in other states. We want to make sure we're not in basically putting them behind the 8 ball. So the changes that we are proposing to make really go around that line. We're trying to make sure that, one, we're keeping up with what's happening around the country, and two, we're enabling our owners of businesses and our businesses to really live their best lives. So some of these changes are outlined with what we provided to you. I will just hit the highlights. This is really something that a lot of lawyers care about, but a lot of lawmakers and a lot of citizens of Minnesota don't. One of the things we're trying to clarify is certain things that happen, who's an owner, who has rights to get information. So we're tinkering with some of the definitions in there to make it very clear. People don't always own shares in companies in their own name now. Sometimes they're owned by trusts, sometimes their own families own them. They're moved around for estate planning purposes. So a lot of these changes are really to address those changes that are happening. One of the things we're adding that's very exciting, and we hope everyone goes along with it, is this ability to effect what's called defective acts. This is what happens if a corporation, and the classic example happens is when a corporation says, okay, the documents say we have 100,000 shares that we can go out and sell, and somehow they sell 100,001. Well, we don't have a way to fix that. That's kind of an oops. But this defective acts allows us to go back and kind of correct that and fix that. So it's really a good tool to help correct things that everyone kind of knew happened, but we never had a mechanism to do that before. We're also adding a provision that allows for a company, a corporation, to put in their governing documents the ability to function during emergencies. It's called emergency powers, and it is something that exists in the entire business sector, nonprofit, for-profit, all of those sectors, as to how do you actually do business when you have an emergency happening. So we have modeled our provision after the Delaware Act. It's also in the Model Act. And really what this says is, in the event of an emergency, in the emergency, capital E, the board of directors or the corporation can either put in their bylaws something that tells them what to do during an emergency, or if they haven't made that choice in their bylaws, what to do. How do they hold a meeting? How do they do their business in an event of emergency? And that's going around the country because we had experiences, absent all the other stuff that happened during the pandemic, we had businesses that couldn't function. They couldn't do a shareholder meeting. They weren't unable to do that. And so this is really enabling corporations to have the tools that they need to do that in and if there's an emergency that arises again. We're also doing a couple changes to things called shareholder control agreements, all this other stuff. It's really just housekeeping to make sure that we're really up to date and we're making our corporation statute the most.
Thank you, Ms. Loeb. Is there anyone from the public that wishes to testify on the matter before the committee at this time? Anyone from the public wishing to testify? Members, questions for Ms. Lowe or for Leader Niska on House File 747? Representative Katiza-Watun.
Thank you, Mr. Chair, and thanks for being here. I'm not a lawyer, and I'm just curious. You had talked about the model legislation that comes from the Bar Association, and then how the state of Delaware kind of moves forward. Are there state by state, as bills like this kind of go across the country and states make updates, are there differences here in Minnesota that we should, be aware of in terms of how they might interplay differently for corporations that choose to do business here in Minnesota versus elsewhere?
Ms. Lowe.
Thank you, Chair Driscoll. That's a very good question. We are somewhat of a unique actor in the country in the state of Minnesota. We have a couple of provisions in our corporate statute that don't exist in other states. And our state has some functionality for protecting minority shareholders, and I mean own fewer shares. That's the definition we call for minority shareholders. Those are not in other states in the country. And oftentimes when we make changes coming out of the Model Business Corporation Act, we keep that in mind. And so some of the changes we're making here are not model. They're not uniform. You might hear me talk about uniform laws a lot. They are not uniform. We slightly tweak things that tend to come out of the national bar, the national arena, to fit our existing statute. And we have a whole group of lawyers that champion those causes and their stakeholders in all of our conversation.
Representative Kaduza, follow up?
No, thank you, Mr. Chair.
Anyone else on the committee wishing to ask questions? Representative Hewitt.
Thank you, Mr. Chair. And Representative Niska, or to the testifier, the defective acts, I'm kind of caught up on that one a little bit, and maybe it's just not being on this committee before and not really knowing the law as well as I should. With defective acts, like you're in your own explanation there of selling 101 stocks, but you have to go back and correct them to 100. Would this take away any liability that maybe they acted in bad character of inflating a price of 101? Or is that's still on the person that sold the 101 to, I mean, it's not taking away anything from the consumer, right? I'm just kind of, again, I'm trying to be as simple as I can on this.
Ms. Lowe.
Thank you, Chair Driscoll. That's a really good question, and no. To be really clear or honest about all of this, there's an interface of many different types of laws when we deal with raising capital for a company. We have securities laws. We have all these other laws that govern that. This is merely allows a company, and it's a whole process. Shareholders vote on it. It just allows for that correction when there is what we call a defective act. It doesn't remove liability. It doesn't play with the market. It doesn't do anything like that. It really is something that we've just never had a tool before. And the example I gave is the classic one. Not in big public companies with market shares. It tends to be, I have a classic one right now, a closely held business with mom and dad and the sons. They have 500 shares authorized in their articles of incorporation, and over the generation, for whatever reason, son's got 500, daughter's got 500, mom's got 500, and dad's got 500. Well, that's 2,000. That doesn't equal 500. So there's a need to correct that so that the record matches what happened. And that's what this is meant to do. It's not meant to drive market change, remove liability, anything like that. That this is really meant to give us a mechanism to fix those oopses more than make massive changes to try to get out of liability. That's not what this is meant to do at all.
Representative Hewitt, follow up?
Thank you, Mr. Chair. That does help.
All right. Any other member questions? Then Leader Niska will give you the final word on the bill.
House File 747, ready for takeoff. Appreciate your support.
I was trying to avoid that, and I thought we could get through with it, but no, not today. I will renew the motion that House File 747 take flight from this committee then and land on the general register. All those in favor? Oh, let's try that again. Correct. Just checking to see who's paying attention. Let's try that again. House File 747 is recommended to be re-referred to the Committee on Civil Law and, Judiciary and Civil Law. All those in favor signify by saying aye.
Aye.
Those opposed, the motion prevails and you are on your way. Thank you. Then we will ask the Commissioner and Representative Perryman to return to the testifying table, and we will bring House File 400 back for discussion. And remember, that is something we're going to lay over. We were just here talking about mandates this morning. So with that, okay. And just for belt and suspenders, we'll move the bill again before the committee to be laid over for possible inclusion at some point in future legislation dealing with mandates. And with that, Representative Perryman, we're back to your bill. And we had taken at least one member question at this point. Commissioner, we'll see if there's another question at this point. Going to ask you to stand by, and we'll go from there. Representative Smith.
Yeah.
Go ahead.
Thank you, Mr. Chair. These are probably questions for the commissioner, but Representative Perryman, if you want to answer as well, please. Do we have any data on how many actual defrayal requests are made of the department each year?
Do you want that to the commissioner?
Yeah, I would assume so.
I was going to say, I don't think Representative Perryman knows
No,
this like you and
I'd
I
be
don't
very
know.
impressed.
Representative Smith.
I was looking to the commissioner.
That, Commissioner.
Chair Driscoll, Representative, I can get you, we do have that information. We can get that information to you, but I don't have it on hand.
Representative Smith, follow up.
That would be helpful. I do have a second question. Thank you. I think this is correct. This language about defrayal of cost is already within the existing ACA, and even within the bill, it says the existing process under Code of Federal Regulations, and it gives the number. Is that correct? This process is already within federal law?
Commissioner.
Chair Driscoll, Representative, the process is part of federal law, but this expands it to apply to a much broader base of products that we would be paying defrayal on.
Okay.
Representative Smith?
So I guess this is getting back to my first question. Do we know the increase from current defrayal rates that we might receive if this bill passes?
Commissioner?
Chair, well, I believe the bill only addresses mandates that pass after 2026, so all of the historical mandates would not apply.
Okay. Oh, sorry, excuse me.
Representative Smith?
Yeah, no, that's helpful to clarify. I guess my final question would be getting back to this idea of what is currently in federal law with the ACA and how it interacts with what this bill would put in law. If the ACA were to be in some way changed or redacted, how would this bill, if it's state law in Minnesota, interact with our insurance market? That's a big question, I know, but I just want to, kind of be clear about when we put this in Minnesota statute, what it's going to do.
Commissioner Dreyer.
Chair Driscoll, Representative, I would need to spend some more time working through that question with both our team and our legal staff to determine what that impact would be.
All right, other member questions at this time of the commissioners are doing some background. Representative Perryman's testifiers on the bill. All right, Commissioner, again, if you'd stand by, because I suspect there may be some questions that you can help us with. And with that, the first testifier that Representative Perryman would like to have on her bill is Mr. Bentley Graves from the Minnesota Chamber of Commerce. Mr. Graves. Welcome to the committee, Mr. Graves, and if you'll state your name for the record and proceed with your testimony, sir.
Thank you, Mr. Chair and members. My name is Bentley Graves. I'm with the Minnesota Chamber of Commerce. The Chamber is the state's largest business trade association. We represent more than 6,000 employers across the state, in every corner of the state, and in every industry of the state. And I appreciate the opportunity to speak here today. As many of you know, I think health insurance is an incredibly important benefit in this increasingly competitive labor market. It allows employers to attract and retain talent and helps ensure their employees stay healthy and productive at work. Almost 70% of our members provide health insurance to their employees. 3/4 of them do so through the state-regulated fully insured market. This allows these mostly small and mid-sized businesses to provide coverage to their employees without having to take on the financial risk of a self-insured, self-funded plan. But it also comes with the second longest list of mandated benefits in the country. Each of these mandates helps someone. There's no question about that. But they also come with a cost. Because of this, we've long encouraged the legislature to show restraint when proposals are brought forward to add new mandates to state statute. But admittedly, this is a tough ask. Since 2022, however, as you just heard, we've had a new mandate review process in place, which requires the Department of Commerce to perform a cost-benefit analysis for new mandate proposals. This new process has helped all of us better understand the trade-offs that come with new mandates. But in doing so, these evaluations have repeatedly confirmed the fact that there is a cost associated with mandates. And that's a concern, because healthcare affordability for employers and their employees is not getting easier. Roughly 3/4 of our members who currently offer health insurance tell us they'll be forced to make significant changes to their offerings, including reductions in coverage and dropping coverage altogether if costs continue to increase at their current rate. Some have already had to make these hard decisions. 1 in 5 chamber members who don't currently offer health insurance tell us it's because prohibitive cost increases forced them to drop the coverage that they had. Fortunately, the bill before you today will help to address one aspect of rising health insurance costs. As Representative Perryman said earlier, there are many components of the cost of healthcare that are outside the direct control of the legislature. But only the legislature can add new mandates to the health insurance sold in the state. So, when policymakers decide that there's a public health imperative for additional benefits, House File 400 offers the state the opportunity to invest in the health of those seeking them, while also ensuring costs for those who rely on coverage in the state's fully insured market don't increase as a result. For that reason, we thank Representatives Perryman and Hewitt for bringing the bill forward, and we thank the committee for its consideration today. And I'm happy to answer any questions the committee might have, Mr. Chair.
Thank you, Mr. Graves. Questions for the testifier? Seeing none at this time, Mr. Graves, I'll just ask you to stand by and maybe bring you back into the conversation as the situation warrants. Our next testifier on House File 400 is Mr. Dan Andreessen from the Minnesota Council of Health Plans. There he is. Mr. Andreessen, welcome back to the committee. If you'll state your name for the record and proceed with your testimony.
Mr. Chair, members of the committee, Dan Andreessen with the Minnesota Council of Health Plans, representing Minnesota's nonprofit insurers. So as was mentioned yesterday, we had a conversation on health insurance, why it costs, costs going up. And there's a lot of factors that contribute to why insurance costs what it is. And one of the reasons is coverage, and that's because when health plans create a policy, they look at what is essentially what is the benefits that we're providing for, and then looking at medical trends, costs over time. This is the amount of cost that for the entire year it will be to cover everyone with that coverage. And since health plans use premiums to pay for that care, they then make a calculation as this is how much premium that we will need to collect. And so we're using that logic. The more benefits you have within a policy, the more premium you will need to collect. And over the past few sessions, we've seen a significant coverage mandates enacted into the fully insured market. We've had 20 mandates since 2014 enacted. Of those, 13 were passed the last 2 years and all went into effect January 1st of this year. The cost of these mandates on their own, some of them are fairly low, but cumulatively they do have an impact. Collectively, our members have determined that premiums are 2 to 5% higher than they would have been if the mandates had not been enacted. So far this session, we've seen 14 new mandates introduced as legislation. House File 400 is a way to mitigate these premium increases if the legislature chooses to continue to enact new coverage mandates. As was mentioned, it uses the existing defray process that plans use with the Department of Commerce, where defray only happens if a claim has been made. And maybe a little bit more background on that process. So under the ACA, when that was passed, part of that was that all insurers, regardless of whatever market you're in, you have to cover the 10 essential health benefits. It also allowed states to expand on that list, but if it went beyond what was within that EHB list, the state would have to defray those costs and pay for the coverage. Right now, that process, some of that is handled through the benefit mandate review process. Some of it is when a bill is being debated in committee, where the Department of Commerce will make a determination whether that bill is in line with EHB or it goes above beyond EHB and requires defray. Then the way that happens then is that plans they keep track of their costs for that benefit that was for defray, and then around April of the following year, that's when they submit their receipts to Commerce and so forth. This process is a little bit new. The first mandate that was declared defrayable was for pandas and pans back in 2020. That's a pretty rare condition, so maybe to your question, Representative Smith, there's probably very few requests that have been made just because the condition's rare. This past year, there were several mandates that were eligible for defrayal, cancer biomarker testing, prosthetics, orthotics, abortion, and whole rapid genome sequencing tests. So we'll probably see more defrayal requests just because the utilization of these services is higher than you would see for PANDAS and PANS. So with that, I would like to thank Representative Perryman for putting this idea forward. Happy to answer any questions.
Are there member questions for Mr. Andreessen? Representative Elkins.
Thank you, Mr. Chair. Mr. Andreessen, do you think that you could collect that information about the volume of defrayals from your members? It sounds like it's going to be very valuable data for the committee.
Mr. Andreessen.
Mr. Chair, Representative Elkins, are you talking about ones that are currently in law?
Yes. The actual deferral payments that have been made.
Great. Other questions for Mr. Andreessen? I do have a couple of thoughts that have come to mind on the mandates as we were talking this morning. Mr. Andreessen, how many of the mandates say that we saw last biennium, the 14 that were enacted, how many of those mandates were already covered in insurance policies, but the level of coverage has increased? So there is base coverage. It's not like this is an excluded coverage. It's, something that the insurance company wouldn't pay for, health care or, for someone to receive health care on, but it's maybe not at a level that individuals would like. Do you have any data or could you speak to that question, Mr. Andreessen?
Yeah. Mr. Chair, it kind of depends on the benefit. Some of these, there were partial coverage like prosthetics, orthotics. There was some coverage. The bill last year expanded that more broadly. You have a coverage for requiring hair prosthetics for cancer. Before last year, there was coverage for alopecia. This expanded it then to cancer. So some of these are completely new, and some of them do build off of, another coverage that plans already do.
Okay, thank you. Yeah, I'm just curious about that because we always hear mandates and we always think we're starting from 0 to 100 on that. We might be starting at 35 or 40% of what's being asked is being covered, and we're increasing or broadening the coverage by the required or requested mandate. So just wanted to get an idea of what that might look like. Other questions? Representative Elkins.
Thank you, Mr. Chair. Building on that, I remember having bills like that myself, where I was asked to carry a bill related to a mandate, discovered that by and large the carriers were covering it, but the degree of coverage was all over the lot. So the question is, I'm wondering if the industry or commerce has a process for evaluating, kind of determining what should be the standard of care in those kinds of kids situations, so that we could get some kind of standardization of when it's appropriate.
Who would you like to address that question to?
Probably both the industry and the department.
Okay. Commissioner, if you'd like to come forward, we'll have him repeat the question for you as well. Mr. Andreessen, did you understand Representative Elkins' question? We'll start with you then, Mr. Andreessen.
Mr. Chair, Representative Elkins, I think the challenge maybe here is that there's essentially two markets here on the commercial side. There's the self-insured and the fully insured. Self-insured is the large employers that is governed by federal law. The state law can't change that. And then you have the fully insured market, which is the individual market, small employers that the state can regulate. So you can sometimes see coverage in one market that isn't in the other, and employers are making a choice as to what they want to cover or not. At the state level, insurers are making that decision, but also the state is making that decision for them. So I think we do run into situations where someone is saying, well, I'm not getting coverage for X condition through my employer, and there's nothing the state can do about that, but they can if they were getting their coverage through the individual market.
Representative Elkins, if you want to restate the question for the commissioner, I don't know that she had necessarily caught everything from the vantage point she was at before she returned to the testifier's table.
Sure, Mr. Chair. So, Mr. Reyer, so the question basically is that we run into cases where a general, class of procedure or prosthetic device, whatever, is included in the general basket of care, but the standard of care for that service or whatever is not really very well defined, and so we find that the actual level of coverage might vary tremendously from one plan to another. So does the department have any process by which, say, a stakeholder group, the one I got very involved in for several years was people with lymphedema and their compression garments as an example. So is there a process by which that stakeholder group could come to Commerce and request a standardization of the benefits that would be available in that category?
Commissioner?
Chair, Representative, no, there isn't a particular process for determining the standard of care. Our process simply is related to whether or not it's a new benefit and if defrayal should be required. Occasionally, our reports do touch on the standard of care and what is part of that.
Representative Elkins.
Yeah, and it's coming to me that I recall having discussions on this point with the industry, and the industry expressing concerns that if they were to gather together to have that kind of a conversation, that they would be concerned about a violation of the antitrust laws, for example. So there do seem to be barriers to this, but there are, I think that there are a number of cases that we've seen. Prosthetics is probably similar to that, where there might be benefit and some benefit in having a process of where involving the medical profession, you decide that standards should have evolved, and this is the new standard of care, and having that consistently reflected.
Representative Elkins, as you were probing that topic, the thought occurred to me, and Commissioner, I'm going to ask you this question, and again, you may not have the answer, but I think it's something that's important because we've talked about it in other committees on this, and that is when we talk about the individual market for reinsurance, when we talk about the commercial market, when we talk about ERISA plans, when we talk about small group plans, when we talk about Minnesota Care, when we talk about Medicaid, when we talk about Medicare, when this committee and the legislature enacts a mandate, it does not hit all of those plans equally. And my question to you is, of the Minnesotans that, the 6 million Minnesotans or whatever number you want to use to quantify the Minnesotans, what percentage of Minnesotans do we believe have coverage? And then within that, what percentage of people may be covered by an ERISA style plan, which any mandate that we pass falls deaf on that and is not incorporated because those are federally regulated plans. Medicare is a federal program. Medicaid is driven by federal program components. Basically and Minnesota Care, we oftentimes don't put those mandates into the Minnesota Care. So as a legislature, we say we'd like to have Minnesotans have this, but yet we really don't have the ability to affect it. So it seems to me like what we're doing, and to Representative Elkins' point, what caused me to come to this question is, aren't we disadvantaging some groups because of the type of plan that they have on these mandates, but also on the other hand, because of the Minnesota commercial plans and these individual products that are out there, giving benefits to these folks, plus there's an extra cost to these folks that other plans don't have. So not all Minnesotans have the same kind of care. And we have no way of directing, and I'm trying to figure out what percent of Minnesotans do not get the benefit of a mandate as well as the cost associated with a mandate, which, as those premiums go up, makes insurance less affordable, and those folks could fall out of the ability to afford coverage and end up in one of the other programs that I mentioned that they don't have that coverage because of the cost associated with that. It sort of seems like it's the dog chasing its own tail and hits the fire hydrant as it bumps off the bumper in the car. I think I've incorporated a lot of different analogies into that. So Representative Reyer, I see your hand, and we're going to just ask the commission. I know it's a lot of stuff that's in there. I'm just looking high level if that information's available as you're collecting other information for the committee.
Sure.
Commissioner.
Chair Driscoll, your question around what percentage of the market that the state benefited mandates would impact, is that, I just want to clarify, is that your core of your question? versus how many
Yes and,
people
yeah,
have.
Commissioner, yes and no. I'm kind of talking, of the Minnesotans that are there, how many have insurance? And then of that group, do we know how many fall into an ERISA covered plan, or that would be on Medicare, or would be on Medicaid, or would be on Minnesota Care, or have no insurance at all, or be buying in the individual market, or be buying through a commercial plan or a small group plan?
Yes, Chair, the Department of Health does track this information, so we could pull that for you or direct you to that information. I don't want to speak off the cuff as to exactly how many
Sure.
people, but I'd say it's a fairly small number of people are uninsured.
So, with that, Mr. Graves, did you have some, if you can address that question, because I do have some other questions, we'll bring you back up temporarily here for that. Just want to take care of this matter that I'm on first, Representative,
about
you are
that,
next.
but-
Mr. Graves, you're certainly welcome to come up if you have something to clarify in here. I was just talking to Representative Reyer, she had a question, and I think I might have kicked the beehive with this one, I don't know.
Thank you, Mr. Chair, members. Again, Bentley Graves from the Minnesota Chamber of Commerce. So just to that question, you're right, the commissioner's right, the Department of Health does track this as part of its chart book, series of chart book data presentations. So as far as the percentage of Minnesotans who get coverage through the private market, that is 55.6% of Minnesotans that are in the private market. And the private market is both the self-insured market and the fully insured market. And of the fully insured market, that's 18.1% of that. So about, 1 in 5 Minnesotans or so is in the self-insured state-regulated market.
Thank you, Mr. Bentley. Representative Reyer.
Thank you, Chair. I just wanted to shed my perspective on your question about how the mandates were distributed across, having carried some myself. One of the conversations we have is that it would not be appropriate to exclude public programs from them. If something is good for the commercial market, it's also good for the people who are on public programs. In that case, we also have a fiscal note on that, and it is, in my experience, often included, as is CGIP, the state employee plan. So I can't think of a lot of cases. I have a bill right now, but it's already covered by CMS. And so we do look at the impact on the broader market, we being at least me, N of 1, when I'm carrying a bill.
Thank you. And again, I realize that the lines kind of move around a little bit from what's in the commerce purview and what's in the health purview, but they are related, and both of these committees are striving to do what's best for Minnesotans as they see it. So with that, thank you. Are there other questions? Representative Elkins.
Thank you, Mr. Chair. No, I think sometimes the things that we require in the commercial plans have a way of bleeding into, say, the ERISA market because we create expectations. But the mix of coverage by plan type is fluid. In fact, one of the things that I had already asked Assistant Commissioner Reyer on the side was, can you create a chart for us that shows how the mix of membership by plan type is evolving? Because we would expect over time that, for example, the percentage of people being covered under Medicare is obviously going to grow. But similarly, I hear, at least anecdotally, and believe that it's probably true, is that as we add mandates on the commercial market, it incentivizes smaller and smaller businesses to move from the commercial market to the ERISA market, sometimes perhaps taking on more risk than they should. And I think those are the kinds of important interactions that we need to take account of as well.
Thank you, Representative Elkins. Representative Katiza-Watun.
Thank you, Mr. Chair. And I'm hoping to clarify, yesterday we had a brief discussion on the difference between like for-profit insurers and nonprofit insurers. And as we talk about individual market, small group market, large group market, fully insured market, since we have new committee members, we have public watching for their interest and for their clarification. Are all of the insurers who currently participate in the individual small market and large group market, are those all not-for-profit insurers?
Representative Katiza-Watun, did you want that to Mr. Andreessen?
Mr. Andreessen, I think.
Thank you.
Yeah, thank you.
Mr. Andreessen, to Representative Katizo-Toon's question.
Mr. Chair, Representative Katizo-Toon, so if you look at the entire fully insured market, it's around 93% are nonprofit plans. Everyone on the individual market, so those buying their own for the insure, that's all nonprofit plans. And then, there's around 200,000 or so in the small group, and then around 669 in the large group. And so there's smaller percentages there. I think United has a little bit of market in the small group, and then I think there's a little bit of United, Cigna, and Aetna in the large group.
Representative Katizo-Toon, follow-up.
Thank you, Mr. Chair. I appreciate that because, I'll admit, I do have some concern about the state defraying additional costs for for-profit insurers. When we do look at some of the exorbitant benefits packages and stock ownership packages and just bonuses that happen in that market. And so if we're looking at insurance as a for-profit industry, and those executives are being compensated for expanding their coverage and those sorts of things, I have some very, very large concerns about the state helping those insurance companies cover the cost of care instead of them moving around the profit that they're currently making to cover the actual costs of care. So I just wanted that to be on the record. Thank you, Mr. Chair.
That didn't sound like a question, it sounded more like a statement. So I think that we are good on member questions at this point. Mr. Andreessen, anything else for him members? We have one more testifier, and then we can certainly bring up individuals as the discussion warrants. And our final testifier was certainly going to go to public testimony if folks are here. But right now we have Mr. John Boshi, I believe I'm pronouncing that correctly, who is the State Director of the NFIB. Welcome to the committee. If you'll state your name for the record and proceed with your testimony.
Good morning, Chair O'Driscoll. Sorry about that. Lead her and members of the committee. My name is John Beshi, and I'm the State Director for the National Federation of Independent Business in Minnesota. Thank you for the opportunity to provide comments in support of House File 400. NFIB represents over 10,000 small and independently owned businesses throughout Minnesota, and the vast majority of our members have 20 or fewer employees. Our mission is to promote and protect the rights of our members to own, operate, and grow their businesses. Most small businesses compete for talent by offering competitive wages and attractive benefits, including health insurance. However, NFIB members have consistently identified the rising cost of health insurance as their #1 business concern. The unsustainable pace at which health insurance premiums have increased has added to the financial pressures faced by many small business owners, and those that don't offer coverage are often at a competitive disadvantage when it comes to attracting talent. And many of those who don't cite the costs as the #1 reason. Despite these challenges, small businesses continue to see immense value in offering health insurance, but the vast majority find it difficult, at least to some degree, to manage those costs. NFIB supports House File 400 because it aims to alleviate the financial impacts of newly mandated health benefits by preventing those costs of those benefits from being passed on to consumers. Under this bill, the state would be required to defray the costs associated with newly mandated health benefits, but only if the Department of Commerce's evaluation of the mandated benefit indicates health insurance premiums. By putting this defrayal mechanism in place, the state will help to ensure that small businesses and their employees are not burdened with higher out-of-pocket costs and are able to maintain the affordability of their health insurance. In closing, we strongly encourage the members of the committee to support this bill, and we thank you all again for the opportunity to share our comments. Happy to take any questions.
Thank you for your testimony. Members, questions for the testifier this morning? All right. Any other questions for the testifiers before I ask if there's public testimony today? All right, again, we'll have you stand by. Is there anyone from the public who wishes to speak before the committee this morning on House File 400? Anyone wishing to speak on House File 400 relating to mandates? Seeing none, members, last chance for questions this morning. Representative Reyer, go ahead.
Thank you, Mr. Chair. I can understand the appeal of this bill. Rising healthcare costs are a crisis. It's affecting everybody. My question is about the likely impact of this change. When I look at rising healthcare costs, it's often due to rising pharmaceutical costs, the rising cost of procedures, increased poorer health among many people, the aging of the population. Those things are driving healthcare costs. So this doesn't affect that, these major drivers. So I'm just wondering what your estimate is, if you have one, on how impactful this will be. Thank you.
Representative Reyer, just for clarification, impactful in dollars, coverage, what do you, help us to quantify that a little bit if you could.
Yep, thank you, Chair. I'm thinking in terms of if healthcare costs were going to go up 10%, if we did this, the increase would be 9%, 9.9, or 5%.
Understood, thank you. Representative Perryman or Mr. Bentley?
Thank you, Mr. Chair. Thank you, Representative Reyer. I think that's a good question. I think it goes back to something that Representative Smith asked earlier, and that is that this would be prospective. So it's a cost management tool going forward. So I don't know that we can answer that question. Just having this law, I mean, if House Law 400 passed and having this law in the statute would not do anything with regard to healthcare costs unless and until the legislature followed up behind that with additional new mandates that were defrayed. So it would depend upon, you know, when and if additional mandates were put in place. It would depend on how expansive in scope those are and how expensive those are. And that would determine the financial impact of this going forward. But keep in mind that it wouldn't just be a kind of a one-time thing. I mean, if this were in place and began defraying the cost for new mandates, you know, it would be in statute in perpetuity. And so it would keep that cost of, the growing cost of that new mandate down. And so over time would also not push up costs.
Representative Reyer.
Thank you, Mr. Chair. I'd be interested in a retrospective. My researcher hat comes on again. If we had an analysis of the impact of the mandates that we had done already and said, if we had been doing defrayal, this would have been the likely impact. Nice health economics puzzle. Thank you.
And Representative Reyer, I think the agency that could help us with that is the agency that reviews the premium requests and for actuarial review, which would be the department, and they probably have that information for us. I'm not speaking for the department, but I would ask if the commissioner would come forward. Maybe that's the source that can help us with that, since they are the ones who are responsible for reviewing and approving premiums and rates in the state of Minnesota. Commissioner?
Chair, Representative Reyer, you were asking whether or not we'd be able to do an economic analysis as to what the cost impact would be of previously passed mandates. To my knowledge, we don't have that level of, the right level of detail in the actuarial memorandums that we get.
Mr. Graves, I'll ask you the same question as you're at the testifying table as well.
Yeah, thank you, Mr. Chair. Thank you, Representative Bradford, for your question. We would love to know that as well, frankly. We have started to get bits and pieces of that. So I don't know if it was I think in 2023, the legislature did pass a provision requiring the department to do 5 retrospective mandate review reports on current mandates that have already passed and already in law. The first of those was on 3D mammogram and did provide, you know, good sense of what has happened with regard to cost of that benefit since being enacted as a mandate. I think the second is currently underway with regard to chiropractic. And then I think there'll be 3 more after that. But to your point, we would love to have a better sense of, you know, just what the implications are of the, you know, the second longest list of mandates in the country already baked in our premiums.
Representative Reyer? Yeah, and my thought on this is twofold. Number one, there's an original cost of premiums. And then to your point, Representative Reyer, as healthcare costs and as costs increase, they don't always increase at the same level. There may be an average increase, but some of the mandates may increase at a higher level or a lower level than the overall cost. And that would be important to know as well, because it's not just a one and done. It rides in the overall policy at that point in the premiums that you pay on it. So there's also a hidden multiplier potentially in there as well on that. Our next question comes from Lead Her. And then Representative Elkins after that, I'm sorry. Lead Her.
This is more of maybe less of a question and maybe more of asking industry to maybe be proactive about this. I'm troubled in this conversation we're having, and I want to build off of what Representative Reyer asked about that if we were to do some type of deferral, how does that, what costs might be in the future and the benefit of that. And I struggle to sit here to listen because in every other industry, businesses do a fantastic job of saying, like, what do they anticipate is coming in the future, what future costs might be. They look at economic factors, they look at global factors, they look at the stability of economies, and if their business is impacted by that, and then they look at what that might cost, and then they look at what they have to bring in revenues. And I feel like to continually hear in this industry, well, we don't know, and we can't estimate this, and we don't have the information. And yet, unless there's a standard like Representative Elkins is asking about, then as Representative Reyer pointed out, that then costs are escalating for all of these other reasons. And we're sitting here going, well, we can't give any answers. We can't look at past history. Like the entire stock market is based on looking at past behavior and how does that predict future behavior. And yet, somehow, in this industry, the answers we've gotten today was nobody knows, people aren't sure, nobody's pulling this information. I'm thinking this is one of the greatest crises we are experiencing is healthcare and increasing healthcare costs, and yet we keep putting Band-Aids on here. And when we think about the cost of defray costs, about the cost of reinsurance for a small group of people, the cost of MAs, the cost of mandates, it's like if we were to add up all the ways in which we're asking government to step in to fix a problem in which that we understand who is pulling the levers in making insurance so expensive. And yet we're then saying, maybe this model doesn't work. And maybe everybody here asking for their piece of what it is that they want. Maybe we should all say, in all of the costs that we're putting into this, what would it take to reimagine what this system would look like so that then maybe we should have a single payer system? Because what would all of these added together, how much would that then change if we had a single payer system, if we weren't doing what we're doing now? Because if there's no will for people to say, there's already all the data of all the mandates that we've passed, understanding then what that cost is shouldn't be that difficult, so that we can understand what might potentially be in the future. And so I feel like because we're all talking about these different things in different pieces, then is everyone saying, well, I don't know, because these pieces are separate, or there's a larger picture here. I think that we need to figure out a will and have a way of figuring out how to do this better, because then we're coming to piecemeal asking for different small pieces of, and we say, well, it's just really small. It's just this thing. Or someone saying, well, this is a big impact, but it's for a small group. I just feel like we have to decide as people that if we're centering individual people's health and wanting small businesses to survive and wanting people to be able to provide benefits, then we have to stop solving this problem on the back end, and we do have to have the will to look at it from the front end and reimagine a system that actually works better and that we can predict what might be happening. Insurance industry for property and casualty, there's a lot of uncertainty, and yet somehow their underwriters and the industry is able to predict what their future costs are going to be and what it is that they need to do to either how premiums are going to be impacted or how that industry needs to address those issues. And I just can't figure out why it is that in the healthcare industry we're having all of these non-answers today, and I would like for us to maybe do a better job. I'm not saying this of an individual person or of an individual, entity that came up to testify today, or any of our members for asking these questions. I'm just asking us, maybe as a government, as partners, as healthcare insurance, as people who represent healthcare entities, for us to maybe do better. That's just my comment for today. Thank you, Chair O'Driscoll.
Thank you, Representative Herr. I don't know if you want a response or if it was more just a statement of how you see the world, and I thought you summed it up fairly well.
Yes.
I want to bring back Mr. Andreessen to the previous discussion we were having about the cost of mandates and maybe being able to address that a little bit more this morning, since he does represent the different plans that have to apply for rate filings with the department, and maybe we can get some information from him. Mr. Andreessen.
Mr. Chair, to a couple questions that came up. So in the benefit mandate review process, plans are notified from the department which ones will be up for review, and there's a certain number of questions that plans answer, and one of those is, what is your anticipated cost? And they all submit per member per month numbers to the reviewer as to what their estimate would be. And some of it could be a range, because sometimes the language is ambiguous and what the cost would be. Those numbers don't always reflect in the reports, but all of our members try to do the best they can to put some type of number on it. In terms of what has been done so far, our folks have estimated that between 2 to 5% is the premium impact of the mandates that have been passed this past 2 years. And, in terms of just in healthcare costs, it is a concern. Pharmaceutical costs keep going up, provider costs keep going up. Just inflation is now hitting the healthcare world as well. But something to kind of keep in mind is that around 93 to 92% of the healthcare spends in this country is for providers. It's paying for actual doctors, hospitals, drugs, equipment. The administrative piece is a lot lower than folks may realize.
Thank you, Mr. Andreessen. Other member questions this morning? And again, just making sure that there's anyone from the audience who wants to testify on the matter before the committee. Representative Perryman, we will give you the final word on House File 400, and again, we are laying this over as a part of a larger discussion on mandates and what this committee can do, as Representative Herr pointed out, in solving an insurance puzzle that's out there. Representative Perryman.
Thank you, Chair O'Driscoll and committee. I am thrilled to hear the dynamic discussion we had today. It is an important issue. Costs are rising for everyone in the health insurance and health. Do be reminded that Senate File 565 is sponsored by Franz and Dams, and HF 400 is bipartisan with Representative Hewitt. So that's our start. This is starting our conversations, and I really want to keep it going. If we're going to use the plane analogy like we've been doing, this plane is traveling. And I would invite you all to be passengers on this plane to help me and help others decide what is right and where the puck is going to go and how we can make this good for all the constituents we hear from and that are suffering and want our help. And as said earlier, what legislation can do is either stop mandates or find funding for mandates. And I am here to listen. I really invite you more dialogue. The plane, like I said, I love the plane analogy. It's not landing yet. We're laying it on the table, but it's not landing yet. And I look at all of you and all the questions you had today, and they were great. And again, please work with me. Please work with the Senate, and let's get this plane to land for the benefit of Minnesotans. So I thank you for listening to me. It is a great bill. Thank you.
Representative Perryman, outside of the legislature, you are a small business owner that also provides benefits to your employees. And so I also understand you have firsthand experience on what this can do and the cost pressures that you as a business owner have when trying to provide benefits to your employees as well. So I think you bring a unique perspective in carrying House File 400 as well. So I just wanted to make that known as well. And to the testifiers, Commissioner, Mr. Andreessen, Mr. Graves, and Mr. Boucher, thank you very much. And with that, reminder, we are here Tuesday to talk about liquor and gaming and learn more about that, as there may be bills coming up yet this session or next session on that. And finally, we also have nothing on Wednesday, and then Thursday we should be taking some more bills. So Representative Perryman, with that, I'm going to make sure that we, on the record, lay over House File 400. And with that, ladies and gentlemen, no other business for the committee. We are adjourned.